Some gon' leave like trees in the wind. Well, y'all gon' see like B to begin. That BC days, y'all free to pretend. Ayy, cap on the internet, rap, we ain't into that. Fact, I'ma interject crazy. Ayy, whack, I'ma intercept that with the intellect. Chat, better give me that gravy. Ayy, that mean chicken. Gotta blow that, get the bag, never know the cause. Yak, get the black, and a few stacks, never gon' lack any cobras, dog. Ayy, I don't got a cross for the NBA. I seen Tobin, the all-white promo vid. And if God be for me, I ain't got a mind to against me. Ayy, shoot the shot like I'm Curry. Ooh, I don't cap for my pitches. Ooh, narrow way, but I'm sturdy. Yeah, I don't pass on the scriptures. Ayy, walk with him 4 seasons. Never going back is no reason. Devil trying to tag you, throw demons. I don't never lack, I'm pro defense. Double check y'all Twitter feeds. It's a whole lot of big cap, like a biz hat, no ministry. You're the waterfall like winter leaves. And if you don't got Christ in the middle with the bread like a centerpiece, you'll probably gotta retool. No sheep food, so hard for the inner piece. All cap like Captain America. Capsaicin and capture the area. Cap crunch, cap marvel.
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, y'all? It's your partners Dale and Cliff back in the saddle again for another edition of Real Estate Friday Live. You know, every Friday at 5 p.m. CST, guys. We get it in. We talk about real estate. Cliff, man, you've been gone for a little bit, man. How you doing, big time? What's going on with you, big dog? Talk to people. What's going on, man?
Yeah, man. It's been a minute. Man, you know, have family things to take care of. Just stuff pops up, but you know, I'm back in it right now, feeling blessed. I got the energy back. We ready to go. I hear a couple things have happened since I've been gone. So we're going to go over it. We're going to discuss it. So, man, glad to be back.
Yeah, man. We had an election that we made on Tuesday. Wasn't it a little bit of election, big dog? Did something happen?
Yeah. Something happened. I think some dude named Trump won.
Yeah, he won. Yeah, he won, man. So, hey, man, we're going to see how this thing work, man. And the markets have actually kind of taken off a little bit more, man, which is pretty cool. You know what I'm saying? In a lot of areas on the foreign policy, also with the stock market as well, also, man. And it's something. What do you think about that, man?
Man, when you look at it from an investment standpoint, it's positive because you already saw the stock market boom. We up like 3 points in just a couple of days.
Yeah.
And I think everybody's anticipating for regulations to get cut. It's just easier to run when you don't got hurdles.
There you go. And increased regulations, right, and higher taxes. What it does is it adds to the bottom line, makes it higher for business, which then curtails what the business could do. Am I right, Cliff?
Exactly. Yep. You end up capping all the things you could do, but you're burdened down.
Yeah. So we see y'all on Instagram, baby. How you doing, Christine? We see you. We see you, Donnie. I see Don on TikTok. We see you, baby. Share this live, y'all. We're gonna dive into this, man. That Cliff, man. You know how we begin it every single time, Cliff. It's the current market analysis. You know how we gotta do it, man. Let's get it done. Let's go. Yeah, y'all. Yes, sir. You know the song, Cliff.
Oh yeah, man. This is old school now.
Yes, sir, man. Yeah, you how we do it, man. Cliff, man. You are a licensed appraiser. It's what you do for a living, in addition to real estate investing, right? Mm-hmm. And also a little bit of some Bitcoin too, guys. Don't get twisted. He's a Bitcoin guy too. Cliff, man, what you seeing, boots on the ground, what you seeing, man, when it comes to the market, when it comes to the what's going on in the real estate? Talk to people. What's going on?
So right now the market is still frozen. Interest rates. So what ended up happening is that the original Fed cut, they cut 50 basis points, right? So that's about 0.5%. Yeah. That did spark a little bit of interest from people trying to jump back into the market.
It did.
But that was only for a couple of weeks.
Yeah.
Since then, what ended up happening is bond yields went up.
Yeah.
Mortgage rates followed. So now you have interest rates that are higher now.
Yeah.
Because people are still wanting higher returns on their yields.
Yes, sir.
Yesterday, the Fed cut again 25 basis points. That's supposed to help. But until we get bond yields to fall, you're going to see higher interest rates. And the way it looks now is we may have higher for longer, which I think Dale was saying that might happen a while back. I got right with the cuts, but
All right,
Dale
all right,
got
all
right.
right.
Yes, I did. Yes, I did.
Yeah.
Go ahead, Doc. Go ahead. Yes, I did. Go ahead. My bad. Go ahead. My bad, Cliff.
He was right. So,
Hey.
but we did get the cuts. But man, until bond yields fall, I think right now in the real estate market, we're frozen. I still think it's a good time. You got to wait for them interest rates to drop. But as soon as they drop, it's going to be one of the best times to buy. We've seen it in a minute.
Boy, but I'm trying to tell y'all, man. Again, I got to give myself another haircut person. It's on me, y'all. It's on me. I'm sorry. Y'all.
All right, all right, all right.
I did predict that. That was me.
Yeah.
Thank you, Kevin Hart, man. Kevin is letting you know, everybody in the back row, that I did say. I did say that, hey, cutting these rates is not a good thing right now because of that bond market. I was telling everybody what's going on, but everybody kept telling me that I was fear mongering. I didn't know what I was talking about. I'm tripping. I was like, guys, I'm sorry. When you look at what's going on when it comes to inflation and things of that nature, and people having record low money in their savings account, but the credit card debt is at a record high, that's a recipe for disaster. And then you had inflation outpacing people's wages. That's a recipe for disaster. That does not attract capital, guys. I am sorry, it is not at all. And so when I saw the Fed cutting rates, because yes, they did cut away, and we're gonna go into what they said in a second, guys, because there's gonna be analysis in a second, and we're gonna show you guys concerning what the Fed is saying. We're gonna listen to what the Fed chairman has to say, and then we're gonna listen to some analysis about it as well. But I just knew that didn't make sense. But I want you guys to pay close attention to what the Fed's going to say, the chairman's going to say, because he's going to talk about that bond market, and then Mick Cliff is going to in real time respond to the very words of the Fed chairman. But I agree with Cliff. I believe right now is the best time in history to acquire real estate. It's the best time because once those rates go down, oh my word! I said you got about a 3 to 5 year time frame. If you agree, man, you disagree.
It may come down sooner, but we're going to see. I think the next 6 months are going to be interesting because we're going to see how far the Fed cuts. I mean, right now they're going at 25, but it looks like they're going to do it every month because they have another one coming up in December and another one in January.
Yeah.
So I'm anticipating them to cut both times.
Yeah. They may do that, y'all. They may do that, y'all. Man, but y'all, again, let's dive into this real fast, guys. Hey, man, the Fed chairman cut these rates, man. We got to play Cliff's song again, man, because now we're talking about money. We got to do it. We got to do it. Yeah. Yes, sir. Anyways, now let's get to this real quick, real fast, y'all. Let's go over here to the Fed chairman talking first. We're going to go to him talking, and then we're going to offer some analysis on what the Fed chairman actually said. It's going to be real quickly because he talked for 42 minutes. We ain't listening to no 42-minute discussion. That ain't going to happen. And hold on, I got you, Cliff. Don't you worry about it, baby. Here we go. Boom. Is that better? No, it's not. That's not working. Yeah, I got you. Don't you worry. There we go. It'll be all right. That's better, yeah. It's all good. It's all good. Hey, all right, this is going to be the Fed chairman talking, guys. It is what it is, right? We're going to hear what he has to say, but I want you guys to pay close attention to what he actually says, guys, about the bond market and also their balance sheet. Listen, here we go.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid. Inflation has eased substantially from a peak of 7% to 2.1% as of September. We are committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal.
Okay.
Today, the FOMC decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by 0.25 percentage point.
Okay.
We continue to be confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained, with inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments.
He cool. He boring as hell to listen to, man. He boring as hell to listen to, man. My word, man. Cliff, man, what do you think about what he's talking about concerning this, man? Do you think what he's saying, man, is spot on? What's your thought process on what he's saying concerning the Fed? What the Fed chairman is saying? What do you think he said when he's talking about his balance sheet? He talks about monetary policy, and he talked about also the bond market. What do you think about what he said?
I think he's putting all those things into context. You know, at the end of the day, the Fed can make the decisions they need to, but if the bond yields don't respond,
Yeah.
it's not much more he can do. What I think it's gonna end up happening is he's gonna end up having to cut more than he'd like because the bonds aren't responding.
Yeah, I agree with that. But the thing about it is by him actually cutting some additionally, is that going to be a good thing or a bad thing in your mind? Because it seems to be like these rate cuts are not working. They're not working.
Man, it's the investors. There's just not enough. There's not enough demand for the new bonds, so the old ones are holding high, right?
Yeah.
Because why would you? They're
Yeah.
not gonna be valuable until you cut much further because it's just a return on your investment.
Yeah.
And if you have the old bonds
Yeah.
who are yielding you 4 or 5%,
Yeah.
there's not going to be a lot of demand for these new ones that are lower.
It's not. It's not, guys. I understand that Donald Trump got elected as president, but those same problems exist. The exact same problems exist, guys. I'm just keeping you 1,000 with you. It's some things he can do to kind of turn it around, sure. But I agree with Cliff. This is going to be a problem moving forward for a little bit longer. But yeah, it's notice how he talked about it later on in that statement. He talks about decreasing their assets, which means all they're doing is just selling off a lot of their bonds. But they're selling off a lot of their bonds at a yield that's not conducive to what the Fed normally takes home. That's not, because if it was, the bond market would be responding positively. Would you agree, Cliff, or disagree?
Yeah, I agree. I mean, it's just there's not enough demand, so they're having to make some adjustments. I think that what we're going to end up going through is an interesting period. We're going to try to resettle these interest rates,
Correct.
combined with what's going on with the debt, because it's not sustainable at the interest rates we're at. Because you got to understand, the United States is going to be paying about $1 trillion a year in debt.
Wow. $1 trillion. Cliff, you're spot on, man. Now, here's my question to you, Cliff, man. Moving forward, how will this affect the stock market? You are a Bitcoin, and you also buy some stocks. I'm not really a stock guy. I like to buy preferred stock versus common stock. My question to you is, how will this approach by the Fed affect the stock market?
It's going to go. It's going to go up. Anytime you have lower interest rates, you have higher stock market.
Yep.
Because money is easy. Money's cheaper.
Mm-hmm.
You can have more mergers and acquisitions. When the interest rates are high, you can't buy a new company. You can't do a takeover. You can't expand. You can't buy new equipment. All of that kind of stuff. If you're a big business, right?
Yeah.
When interest rates fall, then it's more of an opportunity. So they're waiting on those too, especially the commercial real estate. They are definitely waiting on these things to fall because they need to refi bad. Especially if you own office buildings. Which, and I'm gonna ask you, Dale. I have an idea for them office buildings, and I'm gonna throw it on you real quick because I saw this and I saw someone do it, and I said that's genius. What they did is they turned a small office building, and they sold it to a school.
Ooh, what type of school?
Right? No, a typical. So it was a school that's I think it was in Boston. Okay. Where they were going to a public school, but it was crowded.
Okay.
And so they're already busing kids to that location, but there's an office building around the corner that's kind of empty.
Okay.
It already is commercially built for bathrooms, right? But think about this: it was innovative because instead of you going from class to class, you walk to the other end of the building. You take the elevator.
Oh wow, you're right. Actually, that's pretty brilliant. That's pretty. That's pretty brilliant. I like
They
that, man.
they already have the classrooms. You just segment the classrooms. All you
Wow.
need to do is add desks, and then you have a cafeteria downstairs already
Yeah.
ready to go.
Wow, Cliff. That's actually brilliant. I like that idea. And it works in any type of economic situation. Any type of, when it comes to the city, a low income city, a mid tier, it all works well because you work out the deal. That's good. I want you to hear the analysis of. I actually got a lot of respect for this gentleman on Fox Business. A lot of respect for this guy, Charles Fink. He goes into what's really going on when it comes to the market. They talks about the bond market, and this was before. This was before. Okay, when it came out. We're talking about like seconds before. Watch what he says. Let me know if you can see that.
Breaking right now, 2 days after what many agree is the most consequential election in a generation, the FOMC will make a decision on interest rates as less than a minute away. More importantly, Jay Powell will have to navigate questions about the timing and size of that last rate cut because this is what's happened. The 10-year yield has gone through the moon. It was supposed to go down. Instead, it's going up. Wow. The economic surprises, they won't stop going up. They also were supposed to go down, right? Wall Street thought maybe things are going to get a lot worse. Instead, there's been a string of positive surprises, one after another. Does Jay Powell have a handle on this economy? And then also we have this. Core CPI, inflation, it's drifting lower, but still, it's nowhere near where they said it would be. Have they assumed that maybe the wrong thing? So here's the thing, folks. Buckle up, because I can tell you right now, there's a ton of confusion out there. Let's go down to Washington.
So here's my question. What do you think about what Charles talked about there?
Yeah, it's kind of what I always thought. I didn't think that it would drift to their 2% quickly. Mm-hmm. They were going to try to say that over time. And they mentioned that. They kept saying over time, because the truth of the matter is what we talked about. In order to hit that actual 2%, but they said, they kept saying 2%. To do that, they'd have to crush the economy. They'd have to raise interest rates so high.
That's correct.
That it couldn't function.
Yes, they're correct. Some people on TikTok are saying he lied. I have to kind of agree with you a little bit as well. My whole saying is the Fed is the biggest PR firm on the planet. They are there to control what you think about money, and they do a fairly good job at it. I got to give it to them. They kill the game on that, y'all. They do. So we have to be. That's why I always say when the Bible says you will know disciples by their fruit, that same prevalent when it comes to the economy. Look at the fruit of the economy, not when someone is telling you about the economy. Look at the core fruits of the economy, and don't get so focused on the what I call the ancillary type of facts. And there's 7 cycles of inflation. And I'm like, forget that, man. What's the definition of inflation? Too much currency flowing to too few goods. Keep it simple, stupid. Keep it simple. Keep it real simple. Complexity is a tool that people use to control you. Complexity is valuable to those that are trying to deceive. It really is. Now, Cliff, man, let's get to the money now. We got to get to the money now, because of the fact that before we get to the money, let's talk about this here, Cliff. When it comes to how do you think this rate cut is going to affect the real estate market from a retail standpoint and from an investment standpoint?
I don't think you're going to see much change. Quarter point doesn't really do a whole lot.
Yep.
It's nice, it means they're trying. Yep. I really thought they'd do half a percent.
Really?
I thought they'd be trying to drop it strong. Quarter, after doing 50 basis point to start, then do a quarter, it almost seems like they don't know what they're doing. They don't have a grasp on exactly what it is, because if you look at how they raised interest rates, they started with a quarter and then raised it to 75 and tailed off. Now they're starting strong and then tailing off already.
Amen. I mean, I think the Fed knows what they're doing. And I think what they're doing is trying to control the mentality of the consumers, because our currency is backed by nothing. That's why on the dollar bill it says backed by the full faith of the federal government. The key word there is faith, not gold, not silver. It's a belief system, faith. And so as long as they can continue to tell the consumers that we are the federal government and we can handle this, that's the faith they need. That's the reason why every single administration and every single Congress, what they do is they deceive when it comes to money. That's why when it comes to the Congress, they print as well as the executive branch, they print, and they ain't gonna stop. That's why I always do opposite of what a politician telling me to do every single time. Now I agree with you when it comes to the retail market. It's gonna be stagnant. Now the investment market, we active. we active. We're used to paying 7-8% interest rates. Am I right, Cliff?
Man, it's been part of the investment world for the last several years now.
Yep. So we're used to this new normal of people, and so for us, we buy. You make your money when you actually buy real estate, not when you sell it. So Cliff and I know how to buy properties at the right price point up front. And I'll give you an example in a second of a deal that I just closed on. And I'll go through the numbers. But Cliff, man, we got to get to the money, y'all, because we talk about a lot of the problems, but at the exact same time, we got to ask Cliff. We got to get to the money. Before we get to the money, we have a song. Here we go, y'all. We got a song.
I get money, hustle, repeat.
I get money,
hustle, repeat.
Now let's get to it, guys. What is the most profitable investment strategy moving forward in this type of economy, Cliff? This type of environment.
The most profitable.
And it could be 1, 2, or 3, not just one.
I think right now your probably best bet is rentals. Probably because you're going to wait because that allows you to play the long game.
So rentals. I agree with the long-term game. Now, how do you combat rising rental rates in some certain segments of the economy?
I mean, if it's rising, if rates are rising, that should help you out. If there's a lot of demand,
sure,
and then it's going up. But I'm actually seeing is it pulling back a little bit, slightly.
Really?
Yeah. I'm seeing it pull back from where it was. When everybody was moving. Yeah, it's definitely been since inflation. When inflation was going strong, we saw higher rent rates.
Okay.
They've been coming down month over month. I'm seeing that.
Wow. Okay. So rental rates are pulling back. That makes sense. Now in those mid-tier towns, I'm seeing rental rates stay strong and even go up a little bit.
Yeah, in some towns. Yep.
In some towns, not all towns, but in some towns, guys. So it's that is what I'm kind of seeing a little bit as well. I agree. A rental scenario is the more proper thing. That's why I said 3 to 5 years of this time, of this window to make a lot of money in real estate. Like in 2008 debacle really began in 2006. That's when it really began.
Mm-hmm.
So those that are ready, like your partner and Cliff, we made money in 06, 07, took off in 08, 9, and 10 because we saw it coming. So when I say 3 to 5 years, what I'm saying is there's probably a 12 to 24 month window before it hits. And then those that are positioned the right way make a lot of money. Am I lying, Cliff, or am I telling the truth?
No, you got to be in the right position. I mean, you don't need to get one right purchase, and man, you can make a killing on it. You just got to be able to know when's the right time to get in. But at the same time, if you're buying consistently, you're gonna ride the wave anyway.
Yes, sir. The thing about it is, it really depends on if you know what you're talking about, guys. And so we're gonna go into how I'm gonna go in a second. I'm gonna go through some numbers on a property that I closed as of yesterday. In a clip in Texas, and the numbers were crazy, guys. We'll be right back.
Through everything, but let's start from the beginning. How'd you get into this space?
Well, when I was 17 years old, my Uncle Gary, who still lives to this day, introduced me to a concept called passive income. Okay. And I said, "Oh, Uncle, what's that?"
Yeah.
He said, "Something that you do one time, but you get paid over and over again." I'm like, "Why am I trying to go to college? I want to know how to do that." Gotcha. And so while I was in college, I began to look at business models that generated passive or residual income. One of them was real estate, because everybody and their mama actually had it, from Robert Kraft, Jerry Jones, all the billionaires actually had real estate in their portfolio. So I began buying real estate while I was in college. The first deal that I did, I made $3,500. And in college, that's a big time. In college,
Sure.
you broke.
For sure.
In college.
For sure.
Then I went from $3,500 to $10,000 to $26,000, and now $35 million worth of real estate. For me, business is always about solving someone's problem. Whenever you're buying a real estate transaction, the one thing I look at is what's the pain point? Why you want to sell for? And typically, I like buying properties below wholesale. I never buy properties at retail. That didn't make sense to me at all because I'm planning for the worst case scenario. Each and every deal that I actually acquire, I actually take home cash when I actually acquire it. Wow. Every single time. All right, guys, we're back, guys. Real quickly, guys, we're talking about the most property investment strategies. I'll give you an example of buying correctly. I bought a property in Texas, right? I bought it for $84,000. So it's a 3 1.5. I mean, 3 1.5, 3 1.5. Yeah, 3 1.5, and no garage, but it's 3 1.5, which is fine. They converted the garage into a bedroom, which made it three bedrooms. Which is fine. But for $84,000, as is value $113,000. Not bad. The scope of work, $38,500. Said $38,000. ARV at per value, $169,500. Not bad, is it, Cliff?
Nah, not bad
at all. And again, I bought this property in a mid-tier town in Texas. What are mid-tier towns in Texas? I'll give you an example for Texas. Temple, Texas, Lufkin, Texas, Killeen, Texas, some areas of Waco. Let's go to Mississippi, Jackson, Mississippi, Starkville, Mississippi, some areas of Madison, Mississippi. Let's go over to Florida. I don't know that much about Florida as far as mid-tier towns in Florida. What states would I invest in? I invest in Texas. Oklahoma is a gold mine. There's a lot of businesses like Kevin O'Leary businesses. They're flowing to Oklahoma. Cliff, do you agree with that, man?
Yeah, man. I really like Oklahoma. I haven't done many deals in a while out there because, man, everybody's flocking out there. They're taking all the good ones. What I'm seeing out there, man, is plenty of opportunity to build.
Oh,
because the land is still so cheap. You know, you can still get it, and I mean close to the city center because it's not overly populated.
Yeah.
So great that you can buy and build. But yeah, I like Oklahoma, and I like Lawton. I may start looking out that way as well.
Yeah, Louisiana's a good state. Yes, sir. I was actually in Baton Rouge 2 weeks ago for the Southern homecoming for my media side. We had a ball down, but down there in Southern, brother. Turned up, ate so dang good, brother. It was cool. But the exact same time, I had a good time. But I saw so many jewels in just Baton Rouge.
Oh, yeah.
I said, whoa. You know, Southern is kind of on the lower income level. Now, we went to LSU. That's a different.
Oh, yeah.
It's different over there. It's different over LSU. It was quick. And they're about 7 minutes apart.
Mm-hmm.
I mean, that's how close Southern was to LSU. I mean, it's 7 minutes apart.
Yeah. And I mean, you can't go wrong with going over near Baton Rouge. I mean, that's going to be there for a long time. Long time.
Grambling, that's kind of an older area, but you can find some jewels there. And the Grambling University, anything near a university, guys, you can take it. If you get it right, take it. Anything near an Air Force base or Air Force base that's in the city, take it. Colleges, take it. It's real simple. Now, guys, why do we tell you guys this, guys? Very simple. People ask me and Cliff, can we train them when it comes to real estate investing or anything that we kind of do? And the answer is always yes, we can. But the thing about it is we want to kind of do a little bit different training. We're actually giving away a free ebook. It is 100% free. We don't want no money from you at all. We don't need your money. We're doing just fine. Our philosophy is if we can teach how to locate a distressed property, right? Vet the deal the right way, structure the deal the right way, we'll fund the deal for you, and we can profit split on that deal. And we want to send you a free book of how you can locate distressed properties in your city, county, or state. It is free. There's no money from you at all, period. Scan on this QR code, click on the link below in the description. Or if you're on a TikTok or Instagram, when you can't do any of those things, no worries. Direct message me the word real estate, and my team will get you at this exact same link. If you could, Cliff, tell the men, how important is it for someone to understand how to locate a distressed property the correct way?
I mean, that's the whole. I would say that's probably 90% of it. You know, if you can't find a good deal, then the rest of it won't work.
Correct.
You know, you need to be able to locate it, and you have to be able to understand what you're looking for and what you're looking at.
Correct.
And so that you can put yourself in a position to say, if things go wrong, you have different ways of being able to handling that. But you got to be able to buy it right first. If you don't buy it right first, there's not much more we can do for you.
Can't. Matter of fact, if we can do something for you, we can buy it from you the right way. You know what I'm saying? We can do that if that makes sense, because you've mismanaged the whole situation. So again, scan on the QR code, click on the link below, or DM me the word real estate. No problem. Next, guys. Some folks say, hey, LaDale, this is great. I love it, man, but real estate is just not my cup of tea. That's no problem. A friend of mine, Matt Zapata, did a free video. It's free, called The Passive Income Blueprint. Matt does fairly well in his industries. He makes 6 figures easily per month, multiple 6 figures. And he actually taught on how to generate passive income with 3 different business models. And the third business model, the one he talks about, it's going to surprise you on how he's able to do it, guys. And newsflash, guys, he actually did a case study on your partner. I'm in the video, yo. But man, no worries about it at all. If you could click on the link below, scan on this QR code, or DM me the word passive income, and my team will get out to you this link. And it's completely free. Don't want nothing money from you at all, period. And then lastly, guys, man, you see me always looking better than you. No worries. Don't get mad at me. Just talk to Jesus about that thing. Guys, we have our own I Got That Bag University merch. Hey, each time you see me, I know you're in awe. It's because of the merch, guys. I look better than you. It's okay. Don't get mad at me. Talk to Jesus, and also my mom and dad about it. Let you know. But anyways, guys, get you some merch, guys. Real simple about, guys. Click on the link below or scan on the QR code. We always say, show us your diploma. What show you your diploma? The bag, the check. Show it. We got hats, we got hoodies, we got t-shirts. Do whatever you want to do, guys, man. They flying off the shelves, guys. It's real simple. But Cliff, man, that's all I have to say, man. You want to say anything, man, before we get off your dog?
No, man, but I'm glad to be back. I'm gonna start being back here more on the same schedule.
Yeah.
And man, just follow us, man. Keep up. We're gonna be back next week.
Yes, and also, guys, every single time, guys, we do one thing.
I get money, hustle, repeat. I get
all we
money,
do.
hustle, repeat.
That's all we do. Get money, hustle, repeat, guys. But guys, thank you, guys. Thank you for your time. God bless you. As Cliff says, you are one deal away from changing your life. God bless you, guys. See you next time. Peace.
Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Big God, big grace. Big God.